Hello, everyone. This is Faisal from Cryptosomniac. I am the stock equities research analyst, and I am here today joined by legendary hedge fund manager Austin Ashraf. Welcome, Austin.
Hey, what a treat to be interviewed by none other than Faisal. I was always looking forward to this. Let's get rolling, son.
Okay, yeah. So basically, this is going to be our first video.
It's not a video.
You're right. This is not a video. This is a recording.
Yeah.
This is going to be our first recording. We're going to talk about a wide range of topics regarding the economy and how maybe some of the political headlines are affecting the markets. Because as we've seen over the past week, whether it's the impeachment inquiry or the threat to take China's companies off of the U.S. stock exchanges, there's been some pretty rocky headlines, and I just wanted to get your take on how you are maneuvering through that, or are you completely in cash, or do you think the market will survive from here?
Good question, Faisal. I am currently. I have a lot more cash than I normally would, and not because I think there's some long-term downward trend in the market or any such thing. There's old adage in the market, and I've always followed this and have been very successful with that, is you never fight the Fed. Mm-hmm. You will always have a lot of noise in the market, and it's true that impeachment and China and all this, eventually all these things are going to work out. And the problem that would happen with most of the investors, that they get so tied up with any short-term downtrend in the market that they sell all the good stocks, and they're scared, and the market drops 10%, but to make this point again, the 10%, 15% corrections in a bull market, in ongoing bull markets, are very normal. So most of the people get scared when when they see a downtrend in the market, and they don't know when to get back in. So I always say, keep a long trend in mind, and focus on the fundamental trends in the market. As long as Fed is friendly and willing to give you a put, you stay with Fed.
All right. Well, sounds good. So overall, you're pretty positive. You think there's going to be some rockiness short term, but in the long term view, this is really just a blip in time. Would you be buying some of the names that have been hit, some of the software names that were seen as, big winners, big safe trades in regards to having protection from Chinese tariffs? Would you see them as a buying opportunity at this point?
Faisal, let me say, make this thing very clear. We are in very early innings of so many disruptive companies that are coming in the market, and so much change is happening technologically, that is mind-boggling what is about to come up next. Mm-hmm. I'm very bullish on some of these tech names. Software is going to be the dominant investment theme for foreseeable future. So yeah, absolutely. These stocks, these high growth stocks, could correct 20-30% in a heartbeat. And if they do, when they do, you got to have a courage to buy them, and not look for the absolute bottom price, because you will never catch it. I don't know anybody who has been successful in catching the absolute bottom price.
Well, okay, that's very interesting. So, when I look over a lot of software companies, though, you do already see some of the 20-30% drops within these names, whether it's Smartsheet, CyberArk. You have different, high growth technology sectors where they've seen this drop. And so you would not be buying them at this time, or do you think their high valuation is still a problem with the market being at all-time highs? They have a risk for maybe coming down when the market comes down. If it's not ready to break out, they could see another leg down, or do you think this is the opportunity to buy before it starts to rise again and maybe lead the market?
Well, the market to me seems at this level seems fairly valued based on S&P earnings. So the market needs a catalyst to get to the next stage, and I believe that this catalyst could be some sort of deal. It doesn't have to be a perfect deal with China. Some sort of deal with China where we get this part of this noise out of the way, So but the way it looks now is this thing could drag on for a little while. Trump is going to be under a lot of pressure to get this deal done before election, and Chinese are in no hurry to do it because they see Trump politically weakening. So that thing would play out near term, and that would create a just tremendous amount of opportunities to buy these fabulous growth companies.
Okay. Do you think there is any possibility of a chance that the market would sell on the news that we got an okay trade deal and that we haven't already priced in a good trade deal, for a matter of fact? Because if you look, earnings have actually decreased in 2019 for the year. I mean, they still look good in 2020, 2021, and 2022 for the companies that are out. But do you think, stocks are at close to all-time highs? Do you think they were held up because of this optimism with trade? And then as soon as a trade deal comes out, it seems like we may be in for a sell on the news type thing because everyone knew it was going to come, or it wasn't as good as was promised. Do you think that's baked into the market at all?
I'm not sure if it's fully priced in or not. But the bottom line is that if the deal includes China opening up their markets to American companies, that's a huge home run. That's a huge market that is not priced in. And companies like Visa, American Express, you just name, these companies are not allowed to do business in China right now.
So can you touch a little bit on that? Because, I think it was a couple weeks ago we saw Costco, they just opened their first stores in China. So when you say companies are not allowed to go into China, what exactly do you mean by that? And how can a trade deal potentially open up that? Because you look at Costco was able to open up. Some American businesses do business over there. It's not like it's completely restrictive. So how much do you expect things to open up?
Okay.
To what degree?
None of the financial companies
Okay.
are able to do business in China.
Which specific companies do you think could benefit the most?
MasterCard, Visa, American Express. You name some of these names, so like even Microsoft, Google. They are restrictive in China. They are not able to compete with the Chinese companies so far, and if those restrictions are removed, the sky's the limit for these companies. This is that's a lot of people in China. So these companies could really benefit, and you'll see valuation of these stocks, still attractive if that deal. And I think that eventually that will happen.
I totally agree. Okay, so let's go ahead and pivot a little bit beyond the whole trade war and economic stuff. What are some of your favorite sectors that you're looking at today in regards to, you said you have a lot of cash, but you're not totally in cash. Where exactly are you putting that money to work?
Right now?
Mm-hmm.
Right now, I own a lot of REITs, growthy REITs. I'm very bullish on 5G, and so I own these tower companies. They pay you 4 or 5% dividend, and I think that as the 5G gets built out, these companies are going to be just printing money. So I'm very bullish on that 5G. And any of the names that even Verizon looks very good, very conservative name. I'm shying away from pure growth for the current time being, and I've shifted to more defensive names, but with growth attached. So my portfolio reflects a lot more dividend plus growth right now. So while this thing goes on, I want to be able to get some return on the money.
Yeah, sounds good. Sounds like it's been a winning strategy too. Can you just give me your top three picks, whether it be 5G or anything in the REIT sector? What stocks do you really see have that rare combination of having a good dividend yield while also having good growth prospects?
My top name would be your CCI, AMT, and Verizon. And what about you? Any names you like?
I like Store. Store is one of
Store is more of a it's a bet on totally different type of. I own some Store, and I think we talked about it a while back. It is a very unique business model. It is something that as Amazon has disrupted the retail industry, all over. This company has figured out a formula to not compete with Amazon, and instead, go after just basic businesses that will not be disrupted by these online giants, and they manage their books very good. Stores. Warren Buffett is a very big owner of this. So that's a plus. So that's just it's not a tech company. It's more of a, something you tuck away and it pays you very good dividend. And I think that they will continue to buy it and invest back in the business and be very profitable for the shareholders.
Yeah, they're growing their earnings at above double digits too, and the revenue growth is pretty good for having
very impressive management.
Yeah.
So when I'm investing in anything. One of the things I look for is what is the quality of the management and how much stock do they own? Very important.
How can you tell that management is good? What are some of the factors that you look at that tell me, okay, this management knows what they're doing? Is it kind of how they're managing their debt? Is it you look at ROI or what are some of the tips that you use?
Yeah, no, ROI is a good thing to look at. You also look at I also look at the revenue per employee. How are they managing? A lot of the companies you see when they start to grow, they go bonkers and start hiring people like crazy. And then when they eventually experience some sort of slowdown, they don't know whether to lay off these people or they don't know how to manage that thing, and eventually. They fall out of favor. So it's very important to see how these guys are managing their revenue per employee.
Okay, revenue per employee, ROI. Do you look at anything in regards to debt in today's market environment with rates being so low, or do you really not factor?
Well, as long as these guys are taking on debt but delivering you, for instance, if they borrowing an additional dollar, but they're returning the shareholders $1.20 or $1.30, that's a very wise way of taking on debt. But if you're taking $1 on and you're delivering investors less than $1, that's a problem.
Well, how long do you expect them to? So maybe initially they may be making 50 cents on that dollar, but their plan is to eventually get to the $1.25, the $1.50. How long are you willing to wait for them to kind of get
Well,
through
you can look at their history as to how over the last 50, you look at how long has the CEO been in place, and since then, how long has he taken on? How much debt has he taken on, and what has he returned?
Okay.
So you can only look at his track record.
Yeah. No, that makes total sense. It looks like we're almost out of time right now. So just before we close out, I do want to ask you just one more thing before we leave. In this market environment, it gets very, very tough to know when to sell because it seems like there's always some bad thing coming along that could end up changing the entire trajectory of the market. I just wanted to know, what are some of your strategies that you are looking not to buy, but when to sell your positions? Are you selling some of your core positions? Are you trimming down core positions? Are you not adding that many tradable assets, or are you even adding shorts and hedges? Just what ways are you kind of helping yourself on the sell side?
Well, I have two type of stocks in my portfolio. They're core positions that I intend to hold for a long period of time, and then I have trading positions, which are more growthy names, and I try to buy them right, but if the stocks go down again, goes against me, I don't take more than 8% risk, 8 to 10%. So I depending upon if I'm positive on the market and what my view is short term, So these high growth names are definitely you have to manage them. But my long term holdings, I would hold them. I would trade around the position, which means if they go down to the bottom end of the range that I think is tradable, I'll buy more, and when the stock goes up, I'll trim that long term position back to normal. So I will trade around the position.
All right, awesome. Oh, you wanted to add something else?
And do you want to talk about the? I have a question for you too. What do you think about some of the companies that working in the area of crypto?
Oh, in the crypto area, I don't necessarily bank on the companies that are saying that we're going to create crypto technology. You got to bank on, the subsidiary benefactors of the crypto growth, which could be the GPUs as people want to, mine. It's getting harder and harder to mine. You have to have more energy, which means you have to have either better graphics cards or more graphics cards. Even things like just computer processors, but like computer equipment. Like I think even all those small subsidiaries are going to be benefited by the growth in the crypto space. So and you can even look at Accenture, which does consulting in the blockchain and crypto space. So there are many ways that you could play the crypto.
Skin the cat.
Yeah, exactly. You don't have to be exactly in the water. You could just fish on the outside.
No, I agree. I see a lot of very smart companies doing a lot of good work in the area of crypto, like you said, Accenture, IBM, and so on. And that's a safe way to probably look at investing in this asset class. I still think it's very early on, and it's a very disruptive technology. So I totally agree with you.
Yeah.
But bottom line is, hey, stay positive, think long term, and manage your assets short term. And that's a key to success. And just never bet against America.
Wow, Austin, sounds like a great closing line. Well, with that, we'll go ahead and leave it at that. So thank you all for joining us